Uber shares got slammed earlier this week as competitor Waymo got its roots into Miami. Mark Mahaney joins us from Evercore ISI, Senior Managing Director and Head of Internet Research. Mark, thanks for being here this afternoon.
Thanks for including me.
Hey, how big was this story this week about Waymo in Miami?
Big enough to move Uber stock by 10%.
Yeah.
I think that there had been some recent deals that Waymo had announced. They'd further consolidated what we call 1P, or they're owned and operated. You need a Waymo app service in LA, but prior to that, the two launches were Austin and Atlanta, where they're going to be launching exclusively on the Uber network. I think the market, and myself too, was expecting the next launch, wherever that was, to be on the Uber network, and it wasn't. That's the disappointment. That's why the stock's up. I continue to like Uber. I may be wrong on this. I think that there are going to be more of these kind of Waymo on Uber distribution deals because it's awfully expensive and it takes a long time to really roll out on your own network a Robo-taxi service. I'm a huge fan of Waymo out here in San Francisco. It's a great way to get around San Francisco.
Yeah.
But liquidity is still somewhat limited. I mean, it's very limited. You can't take it to SFO and you can't take it to the suburbs.
I didn't realize that. I didn't try and take it to SFO when I was there, but I was there a couple of weeks ago for a conference and was spinning around in it. I was pretty impressed. Seems like it is inevitable, sort of the takeover eventually. Literally, first ride, it swerved out of the way of a car backing out, illegally, basically. So it was pretty impressive. So take me through, forgive my ignorance here, in terms of the partnerships and building on top of networks, are there requirements on how it's supposed to be done, or is it kind of still Wild West, case by case going forward?
I think it's probably more Wild West. The action question, I think, for investors is one robo-taxi company going to come in and run the table? And what I mean by that is, there'll be one company with the leading technology that has 90% market share. So there's going to be a Google, pardon the pun, and Google does own Waymo. Will there be a Google of autonomous vehicles? There could be. I mean, it's possible. Waymo is that Google right now. I don't think it is going to be, though, in the future. I don't know what Tesla's going to come out with, but they certainly, are making a lot of statements about their ability to leapfrog current technology, including Waymo's technology, and come out with a purely computer vision based robo-taxi network. So that would make it a two-player race. And there are a bunch of other players in the space. Cruise. There's a couple of Chinese players. Companies from China, and so my guess is that I don't know if the technology will get commoditized, and I think it's going to be a wonderful technological advancement on a variety of different levels. But how the deals get struck, I don't know. And the ultimate advantage in this market isn't Waymo. Isn't Uber because it has a technology advantage. It's Uber, because it has the marketplace advantage. It's the largest demand aggregator out there. They know they have pretty good models now that'll tell you how many people are going to want ride shares on a Monday, Tuesday, Wednesday morning at different times of the day and going to which locations. And they have this massively liquid marketplace in terms of millions of drivers. And that's why they can almost certainly are going to be able to get you, at the end of the day, consumers are going to decide this, and consumers are going to want low price and 3 minutes, pick me up in 3 minutes. They're not going to wait 30 minutes for a robo-taxi, nor will they wait 30 minutes for an Uber.
Sure, they're going to go with whatever's there.
Yeah. And I think that's where Uber wins in the end. They're the ultimate demand aggregator.
Will there be any pushback? And so far, there hasn't been by Khosrowshahi or really anyone, it seems like, in partnering with technology that does have potential to disrupt workers. Does that catch up to it at all eventually? If it really does start breaking ground, will drivers say, hey, hold on, wait a second, you're displacing me?
Well, I guess it could. I mean, you've had but this is the gig economy. Like, you have to think about these drivers. Like, it's a great way to earn. It's a great side hustle job. Kind of like with delivering for DoorDash.
Sure.
I mean, it's an easy, quick, effective way to make an extra income. There are some drivers on the Uber network for whom it's their primary livelihood, and those people are probably going to be fully employed, for the next 5 to 10 years, depending on where they are. But yeah, long term, you will at least see a hybrid network that includes both, robo taxis and human drivers. And yeah, it probably does put wage pressure in the space. But I think about this as the alternatives for people doing these drives. For an extra job is, I don't know, fast food, Amazon, the fulfillment centers, service verticals. One of the reasons that you've had millions of drivers, people sign up to be drivers, is you get paid decently well on your own terms. You can turn on and off whenever you want to join the Uber network. So that's a different appeal to most employees than This is not a W-2 job, but nor does it have the downsides of a W-2 job.
Yeah, true. Fair enough. Okay, so then a few of the big locations they did in pairs, Uber and Waymo, Austin, Atlanta, right? Miami, Waymo's going on its own for now. So going forward, this is going to still be kind of like what we said, case by case. So I guess it's a source of at least volatility in the short term for Uber, right?
Yes, that's right.
Okay.
You're going to have to deal with that. Now, question is what's priced into the stock in it? One of the reasons we like Uber is that it's 16 times, 17 times free cash flow. We think that's highly attractive intrinsically, but also relative to its growth rate. And typically companies, will trade at 25 times free cash flow, either because they're dominant franchises or because they are generating free cash flow growth that's sort of similar to that multiple. 25 times free cash flow, you're growing your free cash flow 25% per year. We think Uber is going to grow its free cash flow at 30% per year because the top line growth, margin expansion, and they're buying back stock. That CAGR, compound growth rate, is 30% plus on free cash flow per share. So we think this stock is trading at a dramatic discount to where it would be trading. And the reason it is because of these overhangs. So you get a couple of, more neutral distribution deals between Uber and Waymo. You get signs of other autonomous vehicle cars are going to be on networks, and the largest network out there is Uber. Some of those events happen, and you get sharp 10% catalyst the other way too. So yeah, we just had a very big, negative catalyst. I think there's going to be, equal number, probably a greater number of positive catalysts over the next 12 months. And the stock's cheap, it's dislocated, it's a high quality company. I want to buy Uber.
Understood. Love it. Case well made. Mark, thanks for the details. Appreciate that.
Thanks for including me.
Sure thing. Great deep dive into an underappreciated story of the week, and for a big disruptive market still ahead of us in self-driving cars. Mark Mahaney, Senior Managing Director, Head of Internet Research at Evercore ISI.